welcome back. You're watching Market Pulse. Now, there's been an interesting report that CRISIL has actually come up with regarding the BOT projects right now and how the returns have actually panned out. Now, Abhishek has been doing some analysis regarding that. And Abhishek, when we talk about the CRISIL report, what exactly are they actually talking about, the BOT projects, and how the returns actually panned out when we talk from the average point of view?
What we make of this report is the BOT projects, when fetched at a premium, fetches lesser returns is what our interpretation of CRISIL report says. Now, if you get into the details, well, they've pointed out that the return on road projects in 2010-11 is expected to be 6 to 8% lower. Now, if you look at the 2009, now the toll projects, BOT toll projects before 2009 may earn average 22% revenue, and 6 to 8% lower means the project awarded in 2010-11 is likely to drop to as low as 14%. Now, what we pointed out that the road projects backed at a premium fetch less returns. Now, if you look at it in 2011-12, about 65% of projects were awarded on premium basis. And just to give you an idea of the quantum of premium that is paid, well, we just picked up an instance wherein GMR reportedly offered NHAI a premium of rupees 636 crore for rupees 5,700 crore Kishangarh Ahmedabad road project. So this is the quantum of premium that is paid, and that is why it is such an important element. Now, if you look at what is driving this particular thing is the rise of competition. Well, what is interesting that has been pointed out in the report is that the average number of bidders per project increased to 25 to 30. Now, this is 6 times the bidders for project awarded before 2009, which has kind of jacked up the cost. An increase in cost will bring down the average equity returns of newer projects to 14% is what they bring out.
All right, Abhishek, interesting study coming in there from CRISIL. In fact, let's get Ajay D'Souza, also is the author of that particular report itself, onto this conversation. So, D'Souza, thank you so much for joining us on this leg of the show. First, let's analyze as to what's really happened in terms of the BOT projects, because we heard about, Abhishek was talking about various competition angle. You know, you also had returns actually fall to a certain extent. So tell us, what is the rationale that when we talk about the BOT projects right now, and how have returns actually panned out for some of these recent, as when you compare them to the previous projects?
Let me just break up the entire answer into 2 parts. For the projects, operational projects that are there, which were awarded prior to 2009, if you see the returns for 23 projects that we analyzed, has been extremely good at about 22% on an average. We've seen these returns primarily on account of higher traffic, lesser competition, meaning lower bid amounts, and also the fact that the policy environment was pretty uncertain. Coming to the second part of the response is the ones that have been awarded recently. You've seen excessive competition. You've seen competition of close to 40 bidders in some instances. Obviously, we believe that due to this excessive competition and maybe traffic not matching the kind of bidding that is happening and the premiums that are going, you could see returns as low as about 14 to 16%.
You know, you touched upon an interesting part there, competition. That's really been the highlight when we talk about the BOT projects. When you spoke about the returns actually getting affected. So what is the road ahead when we talk about competition? How bad could it actually look from here on?
Very clearly, we're seeing a lot of projects going on premium. And premium is the amount that a developer pays upfront when he bids for a project. Obviously, what we also need to keep in mind is the fact that a lot of the projects that are going on premium are in the phase 3 and phase 5 of national highway projects. These are projects that have higher amount of traffic. So obviously, initial estimates in terms of the base traffic numbers are much higher here. And hence, you are seeing the higher amount of bidding that is happening here. So we expect that returns or the equity IRRs on these projects to be in the region of about 14 to 16% over the life of the projects.
Ajay, so a straight question there. If the return is only going to be 14 to 16%, are most of these road projects viable and sustainable just as a financial model?
See, we've seen that targeted equity returns by developers is close to about 16 to 18%. Obviously, this is going to be slightly lower than that. A lot depends on how the traffic estimates pan out on the phase 3 and phase 5, because lot of traffic that originates also depends on how the catchment area develops. So I think that's a big monitorable which we'll need to closely watch.
Quick point here, Ajay, is there any kind of a geographical trend that also came up where, on certain routes, slightly more busy traffic heavy routes, competition is higher, therefore the return on investment has actually gone down more? Did anything come up in your study?
No, for the projects that are already operational, and we saw 23 of them very closely, and no such trend is emerging. Obviously, the ones that attracted better returns were the one where the density of traffic is much higher. The traffic volumes grew much faster. So we've seen many instances where volume increases were anywhere between 12 to 15%, which means that revenues were in excess, revenue growth was in excess of about 20%. So this is our observation. There's no particular geographic trend that has emerged.
Ajay, the other angle which you spoke about earlier also, how competition has actually increased, there could be some pressure coming in there. So my question to that is, what do some of the smaller players do? Are we expecting some kind of churning to actually take place?
We are already witnessing some of the smaller players looking at possibly selling some of their road assets. We are seeing a lot of bidding that is happening on many of the national highway projects. So obviously our view is that there could be some sale of select road assets by certain developers.
And you spoke about the fact that as to how the contracts have actually been awarded compared to 2009 to what we've seen recently. How has NHAI's role been in the recent time, and what kind of cues are you actually picking up from NHAI? Because the awarding has been at live fire and they've been at pretty high levels right now, but they're still pretty far from the target.
Sure, I think our estimate on NHAI is that the 20 kilometers per day target will be achieved only in 2014-15. That is when we expect a lot of rollout in terms of implementation. In terms of awarding, we are seeing a lot of traction. We are seeing a lot of awarding. I think we are moving in the right direction. In terms of funding, if you look at NHAI, we do not see so much of a problem from the NHAI side in terms of the awarding. Also, I think I need to emphasize here that phase 3 and phase 5 projects are the ones which are actually being awarded, where we are seeing a lot of action. These are the ones which have more traffic on these stretches.
Ajay, you obviously have studied quite a few of these projects and maybe companies as well. For road builders as such, I'm asking a very basic layman question. Is the going to get even more tough because project awards have been slow this year? Now your study is throwing up that returns on some of these projects will be lower than envisaged. So do you see a very challenging year ahead?
Of course, we do see a very challenging year for many of the road projects that have been recently bid out. Also, this is also a manifestation of the fact that in many of these road projects, you're seeing the difference between the highest bidder and the next highest being close to 20 to 25% in some instances. Obviously, the return expectation is going to be much lesser from these projects. However, again, having said that, we would want to see how the base traffic evolves and how the growth catches up, because a lot on the return side is dependent on the traffic growth.
All right, Ajay, we'll leave it there. Thank you so much for joining us and giving us perspective as to how the BOT segment, or rather roads infrastructure sector has actually been doing right now, and on the back of all those details there. That's a view coming in from CRISIL currently. Well, it's time for a short break right now, but up next, we get your views from Sunil Singhania, Head of Equity Investments, Reliance Mutual Fund, on road ahead for the markets. Stay tuned.